Well, there's plenty that's happening in the currency market. The rupee breached 61 to the dollar today as all emerging and developed market currencies came under pressure. This as the dollar index posted its biggest gains in 7 months following Janet Yellen's comments. But there's been several reports out on where the rupee could be headed. Will the rally continue? In fact, Citi's head of Asia-Pacific currency markets said that he in fact sees the rupee going all the way back to the 2008 highs of between 40 and 45. He hasn't given us a timeline of that, but that's what he's quoted to have said. So where is the rupee headed? Is the Modi rally going to take the rupee much higher? Manoj Rane of BNP Paribas joins us now to take us through that conversation. Manoj, as I was mentioning, there are various reports suggesting that the rupee is going to appreciate significantly from the current level. Some suggest that a Modi victory could even take the rupee to between 40 and 45 against the dollar. Do you find that a tad too optimistic?
You know, Shireen, the advantage of not being in the category of an analyst or a strategist or an economist, I can take a few liberties. And, you know, I do think that quite often analysts and strategists tend to be extremely trend-driven. You know, forecasts are based on trends. And unfortunately, you know, the point is there are not too many forecasters who are prepared to sit and make contrarian, forecasts. You saw this happen when the currency had gone to 67, 68, and we had sufficient forecasters. I remember on one day on CNBC itself, there was a strategist for almost the entire day who was forecasting 73, 74 for the currency. So I am not. I mean, just to come back to the point, I'm not that optimistic. I do think that there are certain favorable tailwinds which have led to the currency strengthening for now. The big plus, of course, is that the current account deficit is $1 billion to $1.5 billion a month, which is practically nothing. You know, this will ensure that the currency is relatively stable. Now, what really will impact the currency then is the size and extent and timing of capital flows. So what happens is when you have bunched capital flows like you did in the last couple of weeks, you will see the currency appreciate, as it has indeed. When you see bunched capital outflows, as could equally happen, you know, based on sentiment, based on other factors, then you are going to see the currency depreciate. Of course, the fact, you know, every time you have a poll which forecasts more likelihood of a stable government, then you see the markets rally again. So stability is what markets love, and I do think that in the build-up to the elections, you will continue to see the currency rally. But after the elections, and you know, when the new government is in power, then very much fundamentals and, you know, the local dynamics will take over.
So in the context of the elections, let me then ask you, Manoj, how much more do you actually see the rupee appreciating before counting day, that is the 16th of May, and what is the kind of range that you envisage for the rupee? And if the BJP-led NDA were to come to power, which is what the market seem to like at this point in time, that being the best case scenario, where do you then see the rupee headed?
You know, I would like to relate it to my expectation on funds flows. And, you know, this year in the first quarter almost, I mean, the end of the quarter, and we've seen about $7.5 billion of fund flows into the country. 6.5 of this is debt, okay? Now, honestly, I don't expect too much of debt flows to come in. Debt flows are really arbitrage type, and they are positioned, they're a bit of a view on the currency as well as a view on interest rates. So I don't really think that will continue to pump in as much as it has. On the equity side, I think it has been, you know, you've seen $1.5 billion come in, so it has been slightly more muted, I mean, significantly more muted. So relating that and, you know, extending that, you know, into a trend line, I do think that those type of capital flows will be lesser. So to that extent, you might see the currency gradually appreciate, maybe test 60 going forward. But, you know, my range is really 60 to 62, maybe 61 being the pivot around which it will move.
And is that the range that you would expect post the elections as well?
See, post-elections, I think reality will start sinking in. So you might see again, you know, my more medium-term kind of forecast is for 62 to 65. I do think that, you know, structurally, it's just the current account which is positive. You know, growth dynamics are not yet there. You know, stock markets are at almost close to all-time highs. So, you know, how much does it go without growth really turning around? So, you know, these are factors which will play a part once elections are over and the stable government hopefully is in place, because, you know, that's anybody's guess, right, whether you get a stable government or not. But, you know, having a stable government will possibly ensure that you have a slightly more benign environment for the currency as well, which is, maybe 62 being a pivot and, on the upside 65. But otherwise you might see a, more like a 65 closer level, 62 to 65. But that's my more medium-term view post-elections.
Okay, let me ask you then what you see the Reserve Bank doing in terms of intervention. Where do you stand, or which camp do you belong to? Do you believe that the Reserve Bank should be hands-on, or should it be hands-off and let the rupee find its own level?
I'm completely supportive of the central bank's very well articulated policy on FX intervention, which is that they will only intervene to curb volatility. If you notice, I think Indian currency has possibly been the least volatile of all global currencies, except for the third and fourth quarter to a certain extent of last year. You see, dollar euro, it's not surprising to see a 5 to 6% volatility. Japanese yen even more so. So I think we have benefited from being a less volatile currency. I think from that point of view, it's a good idea for RBI to stay out. Unfortunately, 1 rupee volatility, 2 rupees volatility shakes up a lot of people, opinion makers, sometimes even the government. And we must remember that a 2 rupee movement is what? It's not even 3% as far as the currency is concerned. So I firmly believe that RBI should continue what they're doing. They're doing it well, which is to only intervene when there is volatility. How much reserves are enough, right? There's this other school of thought that you start building up reserves when the currency is strengthening. But, honestly, is 275 billion inadequate? And is 300 billion suddenly going to become adequate, or is it going to protect us? When there is I'm from the school of thought which I would think 275 is as good as 300. And really speaking, we've done well. We've done well on the FCNR. I do think that even the RBI swaps are in the money now. Because they gave protection for or gave a subsidy of 2%. And I think they're already well into that as far as the 3-year cover is concerned. So I think overall it's been managed well. There's no real reason to go out of their way to try and beef up the currency as of now. Currency reserve.
Okay, my final question to you, Manoj. You talked about domestic factors, but what about the Fed's hawkish commentary, and how is that likely to impact the rupee?
I think the emphasis or the effect of tapering on emerging markets, and more specifically in India, I think has always been overstated and exaggerated. In my mind, India didn't benefit that much from leveraged funds. Just to give you one number to give you a sense. Last year in July we had $40 billion of debt FII investments. If at all there can be leveraged money coming into Indian markets, really speaking, this should be a good indicator. We saw a lot of it go out, and by the end of the year we had shrunk to about $19 billion. Now $19 billion, in my mind, most of the risk of outflow is gone, because 19 is too small a number to affect us in any great way. After that, we've seen about 6.5 billion come in. Still, I think it's all right. Some of it is sovereign funds, some of it is in shorter paper, etc. So what I'm trying to say is that we haven't really benefited hugely. We're not an open, we're not a capital convertible economy. So we haven't really benefited that much from the huge liquidity which had been pumped into markets. So I do think that at the tail end of it, once tapering starts, we're not going to get hurt that much. And today's market behavior is really a comment on that, right? The 10 billion further tapering had very little impact on Indian markets.
All right, Manoj, we'll have to leave it there. Completely out of time, but that's the view coming in as far as the rupee is concerned. Not talking 40, 45, not for a long shot. Thanks very much for joining.